The big story of the day was another tumble, and I do mean a tumble in the price of oil, rattling the energy sector and keeping equities from making even more gains today. Today's big drop in crude prices comes after OPEC ministers voted on Thursday not to cut production levels despite lower demand and an oversupply on the market. Now, some analysts expected the cartel to cut production to help end a months-long freefall in oil prices. They are down about 40% just since June. But no cut came, and oil prices spilled like they had sprung a leak. Domestic crude off 10% today, tanking at $7.54 to close at a 4.5-year low of $66.15 a barrel. The international benchmark Brent fell another $2 to a fresh multi-year low of $70.15 a barrel. Now, with the price of oil plunging, how bad could it get in the energy sector? Bertha Coombs has more.
OPEC's decision to leave its production levels unchanged at 30 million barrels a day is certain to unleash volatility in this market until somebody blinks. Analysts say at this point, OPEC is already producing more than what the market needs and more than its own production level of 30 million barrels a day. A number of traders say if we start to see any kind of pickup in demand because of low prices, that might help bring in some stability. But overall, a number of players say expect a lot of volatility in this market. OPEC's job in the past has been to help bring stability to the market by cutting prices. But at this point, they've brought prices down to a 5-year low. And for a number of players, whether it's investors or producers, that's going to mean an awful lot of uncertainty and a lot more pain to the downside.
Now we are seeing a totally different market where the swing in prices could be $50, $60 a barrel intra-year on a forward basis. So this is going to lead to a rethinking of the way people operate in the industry.
For now, consumers and the economy certainly benefiting from lower oil prices because it results in lower prices at the gas pump. But longer term, analysts say, it could also pose a problem for the economy if producers in areas in the country where they employ a lot of people just can't produce oil profitably anymore. They'll have to cut back, and that could mean a loss of jobs. Bertha Coombs, Nightly Business Report, New York.